And right now, folks, we're going to jump over to our man Tim Ord, as we do every Tuesday and Thursday at the bottom of the hour. You can reach Tim every trading day at his website, ord-oracle.com. And don't forget, he's a couple of outstanding webinars under the services tab right at TFNN as well. Tim Ord, good afternoon.
Yeah, good afternoon. A lot going on. We actually got a really decent bullish signal here. How long the rally is going to last? It could last for a while, but chart one is the just a daily SPY. We actually got a daily, a weekly, and a monthly. Kind of look at the short-term picture, intermediate-term picture, and longer-term picture.
Perfect.
But this signal kind of came out of pretty quick. It was kind of, well, anyhow, right in this area, I shaded in blue, and that's where the ticks, the trend got above 1.2, and the ticks got below minus 200. This day we got 1.35 on the trend. This day we got a 2.1 or 1.24 on the trend. 219 downtick readings. We had 230 uptick readings there of 1.28. But anyhow, this area, which is basically 595 to 600, was showing panic. It kind of came out of nowhere. I kind of hesitated, but yesterday the trend closed at 1.38 or 1.35, and the downtick readings were 338. If you get a trend close 1.2 or higher and at least 200 downtick readings on the same day, that's usually a buy signal. And we kind of had it last week. I kind of hesitated, probably shouldn't have, but anyhow, we're long on yesterday's close, and we got enough panic to drive this market higher. And on a short-term confirmation, the bottom window here is a VIX. And the VIX kind of tells a confirmation or gives confirmation for the S&Ps. If the S&Ps are going up and the VIX is going down, which is what's happening here, it's usually a good sign. That's even actually happening on a week. So even though we popped up today, if that VIX was up, that would have been a questionable sign. But it turns out the S&P's up today and the VIX is down. So the chances are this current rally is going to continue. And if you notice, we went sideways for about, I don't know, two and a half weeks here. So that's building quite a bit of cause for the rally to continue. So let's take a look at the next chart. This is the SPY weekly. And what I want to point out, you want to hit a previous high. This is basically the highest high of, looks like about November to February. The market went kind of sideways here, and the highest high came on, looks like about the first week in February. And we tested that high. We're currently testing that high right now on the weekly time frames. And that high, week high back in February was 170 million shares. And month is not over yet, or the week is not over yet. Tomorrow's still trading. We got 245 million shares. You want to hit the previous high at least on equal volume, preferably higher, to show a sign of strength through the high. If you're going up against that previous high, say like on 100 million shares, you don't have energy to push through that high. So we got 245, and we still got a day to go. So this is probably, we're probably breaking out right now. This is against the previous high. We're showing a sign of strength. That's what Weiskopf called it. And so we're breaking out, and we're breaking out with volume compared to the previous highs. And so this rally is for real. And actually flip over to the monthlies real quick. Okay. So this looks at even the bigger picture. So this is not like we're going to rally for a week or two. We're going to rally probably for quite some time. Can we rally to a year end? We'll probably have some minor consolidations. July is usually not, or June and July, you get bounces. A lot of times you come back. What I think is going to happen here, well, you know, months is not over. Months is, we got what, until, well, I guess next Monday's month end, so we're almost there. But if you notice on the monthly chart, when I drew this chart, we had 1.26 billion shares. The previous high of February had 8.73 billion shares. So in a monthly time frames, we're breaking above previous highs and higher volume. So the 610 area is probably not going to be broke. We may test it, but it's probably not going to be broken because you're breaking a previous high and higher volume. You may go up, but you may come down to that area, but this area is going to be support. So in general, we shouldn't see below 610 for the rest of the year. But we may rally up, maybe come back here in September, I don't know, then rally up again and probably head up to that 640 area target. So the short-term time frame's bullish, the weeklies are bullish, and the monthlies are bullish. So this is a real breakout. If you notice how there's really no fanfare right here, there's nobody really talking about anything, and that's really what you have. Is everybody recognizes a breakout, it wouldn't be a breakout.
Sure.
This is kind of a good. It kind of surprised me a little bit. I kind of hesitated on the buy signal, but this is a bigger buy signal. This is a buy signal probably as big as the April lows.
Doesn't get much bigger than that buy signal. And I love the take, Tim, and I agree with a lot of it, man. I'm watching the market today, yesterday especially, and it was fascinating. You're getting, some of the stocks that had been leading this market, they're almost leading it today too. Whereas some of those tech stocks, man, you're up by 2.5%, 1%, 2%, some big moves in the market leaders, and maybe that's what the market needs to carry it higher, because those stocks that have driven it higher, they're driving it higher today as well. NASDAQ 100, but man, those leaders, NVIDIA up, it's just a remarkable rally. It is, for sure. All right, let's talk a little gold. I know gold is next. Go ahead. I'm sorry. Please go ahead. Were you going to add something?
Actually, I wanted to talk about this rare world thing we talked about last week. That was a confirmation, that you had the equal down candle compared to the equal up candle here, even though we had a day between. Both those volumes are about equal. They call them railroad tracks because that's what they look like, and that was kind of a confirmation. So you really had to be bullish from basically what's this May period. I thought we might consolidate, go sideways for a little bit longer. That turns out not to be the case. But in technical analysis, you got to be flexible. When the signals come in, you got to jump on the bandwagon. So I did, and so we're long.
Very true. All right, we're going to come back and we're going to talk some more gold, folks. Stay tuned. We're coming back with our man Tim Ord. Don't go away. Welcome back, folks. We're talking to our man Tim Ord. We got S&Ps near record territory, NASDAQ as well. You check in on the gold contract right now. Gold up $1 on the session, trading at $33.44. Remember, folks, you can reach Tim at his website, ord-oracle.com, and right under the services tab. On the front page of TFNN, you'll see 2 outstanding webinars, 6 secret ratios every trader should know, and the secret science of market tops. Those secret ratios, one of them is the SPY VIX, as we're talking about some of that, so check those out as well. All right, Tim, where are we going with gold? Let's talk some gold.
All right, here's the XAU, and this goes back to 1988, and I marked the times when the RSI was above 70. And that's where those red dotted lines across the chart. There were 7 of them. That's counting the current one. The last 6 marked intermediate term highs. So the chances of this current one marking an intermediate term high is 86%. So it's a high percentage, some sort of a high here. This, to me, it's just going to be a consolidation, probably something similar to like here or maybe here, but it's probably going to be a multi-week consolidation. Nothing real significant. But pull back to, my opinion, there's quite a bit of support around the 175 on the XAU. That's probably where we're going to head back down to, which is basically about 15% lower. So in my opinion, you got an 86% chance you're going to pull back down to 175. So this is not like a major top of any consequence. This is just a consolidation to build more energy to go up. So it's probably, it's probably going to be pretty choppy. Don't know how it's going to look like when it's all said and done. But this is XAU going back to 1988. This is the GDX, also a monthly chart. It did hit a RSI above, we're currently at 73 on a monthly chart. It's probably a double top. I don't know if you can quite see that for your viewers right here, but it looks like a double top. The volume's going to be lighter on the second top. So it's got a support around 39. Previous highs when the RSI hit 70, all of them were actually double tops. So chances are this is probably a double top. I did get out in April. Market went down a little bit, came right back up. I got up around 50 when I made this chart a couple hours ago. It was around 52. But this is going to be just a consolidation on the majors. The minors, I think, are going to do just fine because most of those are turning up on the monthly time frames. The Bollinger Bands are all turning up, and they're all turning up above the mid-Bollinger Band and higher volume. And actually, I'll show that next Tuesday. I'll show you why. I'll be looking out how to pick those out. I keep forgetting to do that, but a lot of these bigger ones have really big runs up so far, and they're due for consolidation. So the generals are going to consolidate, and the little ones are probably going to come to the forefront. This is a little shorter view. This is a GDX on a weekly time frame. We got out back in April, mid-April, so somewhere on this week here. That was 154 million shares. We tested it high at 142 million shares. That works out about 8% lighter volume, which is around 10%. But a couple of weeks ago, this is second week of June. This is the first week of June. This is the second week right here. You tested that previous high the first week of June. It was 42 million shares. And if you notice, volume dropped, eyeballing it looks like about 30%. So it didn't really have energy to push through that high. So you can see what kind of happened here. So if you can't take out the previous high with volume, you'll take out the previous low. This previous low, the first one is 45. That'd be the May low. If we test that on higher volume, I don't know what the volume is. Looks like about 130 million shares, somewhere in there. If you test that on, say, 130 million or higher, chances are that low is not going to go hold. You're going to go down to the next lower low, and that comes in around 39. And I think that's where we're going to head. What time frame? I don't know. September, October, November. It's hard to say. A lot of times October is kind of a higher low for the gold stock, so we'll see how that works out. But nothing, this is a consolidation and an uptrend. It's nothing, in my opinion, to worry about for long term. I think in general this gold market is going to last for years. But short term, just be patient, I guess.
Patience. Always key sometimes, I say, and sometimes that's the best advice at all. It's been a heck of a rally, man. I appreciate the takes. I agree with a lot of what you're putting out there. And, I was sending out charts to subscribers, Tim, of the Gold Report, just kind of reminding people of the cyclical nature sometimes of some of these equities. And, man, the run that we have had, and you think, folks, when you're in the middle of that, Tim, right, that, man, this is, would never go down far, and just the run has just been stratospheric. So it would make sense, man. You almost want it, right, in terms of for a healthy market, that there's got to be a breather at some point.
Yeah, you got to be a breather. I think this is similar to the 2000 bull market that basically lasts from 2000 2012. I got some charts that suggest that. We'll have to wait and see if that turns out to be the case or not. But this is not the major top of any consequence other than a consolidation back down to on the XAU 175, on the GDX 140. The next rally, there's going to be more participation on the next rally than the current rally we had so far. What I'm saying is things are actually going to get a lot better going forward. And I'm talking, maybe this year, it's going to be kind of, rest of this year might be kind of mushy because the consolidation could last until October. But from October, say that is a low of some consequence, we'll be able to pick that out through a lot of indicators I have. But that next rally, you got a lot of these these small ones just turning up on the monthly charts. They haven't really begun their run yet. They're $15, $20, dollar stocks. They're going to be probably $5, $10 stocks someday. And those are just starting to turn up. So I'm thinking next year is going to be a hell of a lot better. forgive my language, than this year. Then this year was a great year. So it's going to get better. It's going to get, before this all said and done, it's going to be real frothy. But we're a long ways from that right now because people are still skeptical on the gold stocks. And that's good.
It is. So. And, it's crazy when you just look. I just said a monthly up going back, same thing to like 1990, and boy, the run it had, of course, the 2000s, man. But pretty wild that we were trading at $2,000 almost in 2011. And that's kind of where the run began from at like the beginning of last year. It was $2,000. So you're talking about 12 years, and yeah, we pulled back. But boy, when you look at it in that context, we were trading at $2,000 almost in 2011. So yeah, we're up by the 3,300. But I agree, as in with you look at it in that context. My goodness, it was a 10, 12 year consolidation to get through that 2,000 price point. And boy, and then you had the consolidation, of course, from 2020 all the way until 2023. So boy, it's just waiting to break above that level, and now here we are. Well, Tim, I appreciate it as always, man. Great information. So, yeah, we'll talk to you next Tuesday. You teased a couple things, so I'm sure we'll have the viewers coming back. And then we don't talk to you on Thursday because the market's actually closed half day on Thursday at 1 o'clock, Tim. So I look forward to the conversation on Tuesday as always, man. Have a great weekend. We'll talk to you then.
Thank you.
Thank you.